we put you on the map. This is Ron Costa broadcasting live in the Mappable USA studios in Las Vegas, Nevada. And folks out there, I think everybody's heard about this whole GameStop fiasco, what's going on there. Today we're going to bring you some information from a crowdfunding perspective. We're going to talk about how that might impact the market and what investors and what issuers you'll be thinking about. This might be one of the most interesting and enjoyable podcasts and informative podcasts that you really need to listen to that we've done all year, even though it's just January. So let's introduce our co-host, Vicky Hutchmala from the World Token Market. Vicky, how are you doing today?
Doing great today, Ron. Another fabulous day in Vegas. And we have an exciting, as you said, exciting podcast with one of our favorite repeat guests. And we're going to get a little insight into the whole GameStop situation. So let's get started.
Yeah, and again, this guy is one of the best guys to talk about this kind of stuff because he really has a good mind for the markets. Let's introduce once again Mike Brette from Small Cap Equity Advisors. Mike, how are you doing today?
I'm doing well. Thanks a lot, Ron. Pleasure to be on the phone with you and Vicky again today.
Absolutely. Yeah, we love having you on, Mike. Every time you do a podcast, people are like, where'd you find that guy? He's great. So, hey, LinkedIn works, right?
Yeah.
We mean to please.
There you go.
We only have
Good.
the very best guests on, and that includes you, Mike.
Thank you. Thank you very much.
So let's just get into this topic here because I know we have a lot to talk about. Mike, is there anybody out there that hasn't heard about this whole GameStop thing and what's going on?
Not if they're alive, no.
Yeah, I find this to be a really interesting story because it seems like a story of the small retail investors beating up on the big hedge fund guys. I know there's two sides to every story, and today what I'd like to do maybe is get your thoughts on how it happened, what actually happened, and what do we have to learn from this whole thing.
Yeah,
so,
that's a good question, a good topic for today.
Yeah. So again, I mean, let's just start from the beginning here. GameStop, publicly traded company, right? And what happened? How did this whole thing start?
Well, it's kind of ironic in a way. Here you had a company, GameStop, that all the analysts, the big boys, the hedge funds, were beating up because of all the retail brick and mortar locations and thinking that they really weren't going to last, so they started shorting the stock. And what they didn't count on, and I'm surprised, what they didn't count on was a bunch of retail small guys, sitting in their basement with these Robinhood accounts where you can go out and buy stocks without paying commissions or sales commissions and things like that, banding together and saying, hey, for whatever reason, they're saying we like the stock, we like the company, and it kind of created a groundswell for other people like that to go out and open up those accounts and start buying some stock when it got below less than, I don't know, like around $20 or something is what it was, and eventually it got bid up as far as $500, and it just created a groundswell of people interested in the stock. Of course, the big hedge funds were shorting it, and if you look at all the reports out there in the news, the hedge funds lost anywhere from 20 to 50 billion dollars because of these small investors banding together and bidding it up. Of course, it was a bubble; it was bound to break and burst, and it did, and tumbled down below $100 today. So, it ran its course. You want to look at it, some people call it market manipulation, but when the big boys do it, they call it shorting a stock, and because they short a stock because they don't think the company is worth what the public is paying for it at the time, for a lot of reasons. So they short the stock. Well, the big boys do it. It's considered shorting, and they're doing a service. When smaller guys band together and do it, it's called market manipulation, and They want to get the SEC involved and have all these committees and investigations and everything like that. that's just the market. That's a free enterprise system. If you buy into it, you might make some money, but if it turns against you, you're going to lose. And I think a lot of the guys, the retail people, lost all the money they made last week. I mean, one guy that started this about 4 weeks ago, started with like about a $50,000 investment, and it ran as high as $45 million is what he made. But from the accounts that I read, he never sold any. And then so lo and behold, Robinhood locked up all the accounts and said you can't buy or sell more than one share at a time. Well, he's locked into that position and the stock tumbled down. I don't know what his position is worth now, but, you run those kind of risks. People put pressure on you, and Robinhood was running out of money on their capital requirements that FINRA had them set so much money aside, and they were running out of money. So, they locked up all the accounts.
Yeah, Robinhood is a broker-dealer, right?
But the question is that why would Robinhood be allowed to determine who can buy and sell on their platform and how much they can do it, or to stop because of volatility? What makes that legal? Or, like you said, investing in the market is a gamble. Sometimes you win, sometimes you lose. But short selling and using media to determine that good news or bad news will allow hedge funds to make more money or less money, where is that legal? Why doesn't the market just be allowed to be the market and resolve situations like this?
Well, that's a good question, and really, Robinhood got all the attention. Robinhood. Answer your question, Ron. Yeah, Robinhood is a broker-dealer where you can open up an account online. They appeal more to the millennial, the younger people that like to mess around and do investments on their app and everything like that. And it's free, as opposed to using another brokerage account that charges commissions for buying and selling. Now, having said that, Robinhood got all the attention through this whole fiasco. Well, you could have had an account with Schwab or TD Ameritrade and still be able to get in and buy and sell as much of GameStop as you wanted to, but you had to pay commissions. And, there was nothing to stop account holders from Schwab and TD Ameritrade and other brokers from getting involved in buying the stock. It was all the Robinhood people that were doing it for free and wanted to do it for free that got all the attention. Right. So, Vicki, you're right. People could have, Robinhood really did what they had to do because of the regulations that were in place for broker-dealers. They have a capital requirement, and so Robinhood was running out of money. So the regulators said, look, you got to stop this and get more money, your capital requirements. So they raised $1 billion on Friday, and then they raised another $2.3 billion today to build their capital requirements. So it's not really something that Robinhood wanted to do. They were required to do it because their capital requirement was below the amount what it should have been. But having said that, if these Robinhood account holders would have had accounts at other broker-dealers like Schwab and TD Ameritrade, they could have continued buying and into the market, but they didn't.
Yeah, that's an interesting point that I haven't heard yet. No one has really talked about that. But somebody listening to this might ask themselves, well, if Robinhood does these trades for free, how does that company make money then? What's their source of income?
Yeah, good question. And, I don't know that much about Robinhood on their business model. I mean, I've looked at it when they first started out and everything like that. They make some of the money on running, for obviously advertising on their website, but they make it on the accounts when people open it up and they make a deposit. And if they're not trading it, it's considered assets under management. And so they work with the money they have under management and make money that way.
Okay.
It's really, I guess it's in the name, Robinhood, steal from the rich and give to the poor. They set it up, trying to democratize investing and take it away from the big Wall Street boys where you had to, in the olden days, to open up an account, it was like $25,000 to open up an account, and it was hundreds of dollars to do a buy and sell trade. Well, along comes, some discount firms Well, then along comes Robinhood and said, well, we're not going to be a discount. We're going to be free. And so there's a whole group of people out, millennials in the bracket that like doing that. Myself, I prefer a full service broker. I know there's not many of them around anymore, but I like calling my broker up and saying, hey, John, I want to buy 1,000 shares of Microsoft, and I don't like dealing on just strictly online because of the reasons that we ran into with Robinhood. They got stuck. The people that had those accounts got stuck and couldn't do any more trades. They were frozen out of the deal. So they have their own business model, and it's making money with assets under management.
Yeah, somebody told me recently, and I never thought about it this way before, but they said when you do something and the product is for free, then you're the product. Yeah. And I guess that goes for Robinhood, and it goes for Facebook good. And just about everybody else, because that's the way their monetization platform. Facebook just wants active users, et cetera. People say, hey, I'm on this platform for free, but they're making a ton of money on you, on me and you, and people who are using the platform for free, and we're giving away all our information, and we are the product on a lot of these things, and that's a little scary when you really come think of it.
And it's up to you. You get what you pay for. The old saying, you get what you pay for. So if it's free, that's what you got. But at the same time, most of these people, and again, obviously I don't know all the hundreds of thousands of people that were on Robinhood, or thousand people, I don't know them, but just in my 25 years experience, people didn't do their own research. They just believed. If you looked at some of the chat rooms, which is where all these people hang out, and read some of the comments they were making. Of course, they don't use their real name. It's some kind of what they call a handle or whatever. But if you look at some of the comments, very few of them, if any of them, did any research into GameStop and to realize where the company was going to go and why they should buy the stock. They were just all listening to other people in the chat room. And I mean, some of the comments were like, well, if he's still in the stock, I'm in the stock. Well, that doesn't make it. That's no reason to buy stock because somebody else is in the stock. And it goes back to research, due diligence. And, you get that with full service brokers and even discount brokers. At least you can get some research and some information. I don't know if they can on Robinhood. I don't have a Robinhood account, and I never go on the app or anything like that. But I can just tell by some of these chat rooms that nobody was doing any research. Yeah.
Well, I'm impressed with your 25 years of experience, Mike. For a 35-year-old, that's pretty good.
Yeah. Yeah.
Well, is this going to lead to, now everybody wants to have the SEC investigate, wants to pass legislation to address this issue and that, and we might get another Dodd-Frank kind of situation. But is this going to lead to a closer look at hedge funds, how they operate, and maybe regulation that addresses that issue from the hedge fund point of view?
Good question. I don't think so. I think it's going to get some headlines. They're going to drag these people in front of a congressional hearing, and all these congressmen and what senators or whatever, they're going to grandstand. Most of them don't have a clue how the markets work in reality.
About.
Yeah, they don't. The staff researches out some talking points, hands them a piece of paper, and they bring somebody up from Robinhood, like the CEO or maybe some hedge fund guy, and they beat them over the head so they can get some sound bites on the evening news to make them look good. And eventually, it's just it's going to be water under the bridge.
It's just a circus.
It's a circus. I don't think anything meaningful is going to happen from it. I mean, again, if you look, I heard somebody on Fox News yesterday or early this morning say, look, they're going to drag this guy from the CEO from Robinhood up there, and he's just going to say, look, I had to do what I had to do because I was pressured by the regulators. And the regulations state A, B, C, D, and I had to follow A, B, C, D. End of discussion. We didn't do it because we wanted to. I mean, so, and all these, again, these congressmen and whatever, they're going to try to beat him over the head and try to get some sound bites for the evening news. But in the end, it's just going to be all talk because really, I mean, who's going to cry river for these billion-dollar hedge fund guys that lost big bucks? They'll make it up. They've already gone into the marketplace and with institutional money and raised billions of dollars more for their hedge funds. It's the little guy that gets beat up. So I don't really think anything's going to happen from it.
Well, I mean, look what happened when they brought the tech guys, the social media guys, the Facebooks and Twitters and Google, and they brought them and they had hearings and they asked crazy questions, and you could tell they didn't know what they were talking about. And it all, a couple days later, a week later, and nothing changed. Nothing happened, and it all went away because it got boring to everybody listening.
Yeah,
and nobody, and they knew nothing would happen.
And nothing's going to happen because those tech companies have too much power to sway voters, and they could, if they want to come down with a big hammer on these senators and congressmen, whether it's federal level or state legislation, they can come down hard on all these people. The tech companies can. So these politicians are going to tread a light, tightrope and everything like that, and not try to press too much. Because like you said, Vicki, all they did was grandstand through this whole thing, and nothing really was passed. Nothing curtailed any of the tech companies. And the same thing is going to happen here. It's all going to blow over.
Well, and what the tech companies realized after the hearings and after all of that and the headlines is that they really didn't know. They didn't ask the right questions. They didn't understand what was going on. But they also realized that they could use and manipulate this, and now look at what social media is doing in censoring and free speech and all of that. And so that's what happened as a result of the hearings, and that's a possibility with these. If they bring the hedge fund CEOs in front of them, the same thing will happen, because I would imagine that a lot of the politicians in the hearings have huge investments in hedge funds.
Oh, yeah. Hedge funds are for the extremely wealthy and well-connected to get involved. I mean,
exactly.
Most of us can't get involved in the hedge fund because the capital requirement is too much, and we don't have a warm introduction to them. So, and they can't advertise. By law, hedge funds can't really advertise and, promote and everything like a normal business. They've got to kind of rely on the handshakes and, the networking that they do with other institutional, funds and things like that. So basically, as small people, we're closed out of that area.
That's right.
Yeah, and going back to some basics actually on this whole story, Mike, you mentioned the hedge funds would short the stock. Can you just explain to people out there what does that entail really? What does shorting a stock actually mean?
Yeah, good question. First off, you borrow. You have to have a relationship with your broker. So you borrow a stock from the broker's account, or the broker gives it to you out of somebody else's account. So let's say it's a Microsoft stock, and you think that stock is going to go down because they're not going to hit their earnings. Somebody's in the management's not going to be around, or they're going to screw up somehow, and you think the company is overvalued. So you borrow the stock from the broker, and then you immediately sell it into the market thinking the price is going to go down. And when it drops far enough, you go back into the market and buy it at that lower price and replace the shares that you borrow from the broker, and the difference is the profit you make. A lot of short sellers lose money. More short sellers lose money than gain. Now, if you want to know, look at how they used to beat up Elon Musk at Tesla. They've been shorting that stock since he started as a public company.
Beginning.
Yes, in the beginning. And all the short sellers, they made some money initially, but they gave it all back when Tesla started going through the roof. I mean, last year, Tesla got up to $1,300 a share. People, it got beaten down to about $200 when Elon Musk was having all that problem with the SEC and, doing different things that he shouldn't have been doing. But and so they shorted the stock, but it rebounded with a couple months later, and so all those short sellers got burnt, trying to short the stock. So it's really only for the big boys, like those hedge funds, that can get in, get out electronically. But anyhow, that's what short selling is. It's borrowing a stock, selling it, thinking the price is going to go down. When it goes down, you go into the market, you buy it, you replace the shares. The difference between shorting it and what you had to replace the shares is your profit per share.
Okay, and then there's a time horizon on these as well. That's why people lose, because they expire at some point, don't they?
Yeah. Well, the actual short sale doesn't expire unless the price goes up by 20% or higher. Then there could be a call where you've got to, all right, the broker's going to call you up and say, hey, wait a minute, you gotta pay off on this short deal, okay, because it's not working. So it doesn't go on forever on it, and that's how a lot of people lose money, because they got to pay up eventually. And that's the problem with the OTC market, the over the counter markets that we've talked about so much. It's not done so much anymore, but it used to be done years ago. It's called naked short, which you never used to short a stock, but you never had to cover the position. It could be out there forever as a naked short, and it would hurt the small OTC stocks that were like under $5. But eventually the SEC kind of outlawed naked short selling, but some people that have a friendly relationship still get away with it in these OTC stocks.
Well, isn't that the reason why people are so up in arms with these hedge fund guys? Because they could really short a stock into non-existence, basically, right? They could just crush a company if they decided to do that, right?
Yeah, absolutely, and that's what they were trying to do to Tesla.
With GameStop.
With GameStop, that's what they were trying to do, and Tesla, and some of the other stocks that they try to short. And like I said, most of the time shorters lose money. I think the figures are like 80% of short sellers lose money, but when you win big, so you make up the difference. But really, it's not, short selling is not for the average Joe out there, because you just don't have access to the information. And I'm not talking about illegal inside information. I'm just talking about most people don't have the tools to do the research on a stock to figure out whether it is going to go down and whether it should be shorted. And they just lose. The stock market is like anything else. Knowledge is power. The more you know about a company, the more you know about the management, the stock, what they're doing, where they're going to go, and how they're going to get there. It all adds to your knowledge about whether you should be in that stock to begin with, as a shareholder or as a shorter.
Yeah, it's that knowledge that we talk about all the time on the podcast as well. I would imagine then, so when people say that they're going long on a stock, that's the exact opposite of what we just talked about. Is that right?
Yeah, usually a long position is, they don't trade the stock out. They're in it for the long haul. And when I mean long, I'm talking 5 years or longer. They don't care if the price fluctuates. They're not selling. They're going to be in the long market. And if it does drop, they're going to come back in and buy at the drop, and then, let it rise up again. And still, they're going to hang. They're going to be buyers no matter what, because they believe in the fundamentals of the company. That's the difference between short sellers, short-term investors. I mean, like Warren Buffett. Warren Buffett is long on everything. He's been that way for 50 years. He buys. He never sells, no matter what happens in the market. But he's the one. He looks for the fundamentals of the company, cash flow. Do they have free cash flow, strong management? Can the management execute? And if the answer to all his questions are yes, he's going to buy and hold.
Right. You invest in a viable company that's going to be there 10, 15 years down the road. Let me ask you a question, Mike. Do you think that the strategy of removing Jeff Bezos as CEO was a relative short selling of the stock, despite the earnings of Google?
Yeah. I mean, Amazon. They did. I think this quarter did $100 billion in revenue, which is the first time, that they've hit that kind of a mark, from what I understand. I know the announcement came out that Bezos was going to be leaving the next quarter. Look, the guy's got more money than God. I mean,
True.
he's with $200 billion, and I don't think there's any end in sight with the Amazon stock going up. It's going to take some hits, but Bezos hasn't really been involved in the day-to-day operations for probably 3 or 5 years. He turned it over to a lot of his, what they call lieutenants, to do the day-to-day operation. He kind of was strategizing with them on long-term, getting into the cloud and, doing the other things they were doing. Then he stepped back in last year. Now he's just out. I mean, I think he's tired. He says he's not. He says he's not going to retire from business. He just wants to do something else. And I think he's a visionary, but he had a good team around him. I don't really think it was all up to Bezos to get Amazon where it is now. It's just a team effort, and he happened to be part of the team. So I think Amazon's going to take some hits, but in the long term, you can't beat Amazon at anything because everything's going to e-commerce, and they're even in the brick and mortar. They bought Whole Foods, and they're back in the brick and mortar.
Oh, they're everywhere.
They have so much.
They're everywhere.
Yeah, they've got so much money they can do what they want to do because their stock is really through the roof. Almost $4,000 a share. They make cash, so much cash on hand. So I think with or without Bezos, they're going to do well.
Yeah, and before we go to the next
he'll
topic, I want to find out about the getting back to what we were talking about before of the long and short. Just one more terminology definition. When people talk about puts and calls, are they the same thing as going long and short?
No, puts and calls are call is an option that gives you. Again, I'm not a stockbroker, so I'm just speaking from my own first-hand information, but not as a stockbroker. But a call is the option for you to buy stock at a certain price at a certain time, and a put is just the opposite. A put is your right to sell the stock. So, and then you pay a little price for that, like maybe on a $50 stock, you might pay $5 for a contract, and that's your cost of going in. And sometimes you got to buy 100 contracts, option contracts at $5, so you're in it for $500, and then you get to exercise those options if you want. If not, they expire. Those are the ones that expire in a certain period of time. And you've got call options and put options on stocks, on commodities like gold and silver. But again, that's in my opinion, you should only get into those options and the call options and the put options if you can do research. It's not something you just take somebody's opinion.
Yeah, exactly. Which leads me to my next question, really, because a lot of people out there are talking about how the markets are manipulated now. What is that? Are they? Is it rigged? And what do crowdfunding issuers and maybe crowdfund investors really have to know about this whole scenario to make them confident that they're doing the right thing and they're investing in the right companies and a company is going crowdfunding, Reg A, whatever, at the right time and everything's all above board?
Well, that's a good question. And it's as far as I'm concerned, I don't care whether it's crowdfunding or just investing in a private placement. Anytime you invest in a private deal, it's dead money. Dead money because, so many of these people are going to a platform, a funding platform, crowdfunding, and investing $500 because they buy into the hype that maybe this startup company or this company on a platform is going to be a unicorn and shoot through the moon if they do go public or somebody buys them out. Again, it comes down to research. 90% of those companies are not going to get bought out. They're not going to go public. And so your investment of $500 into 10 different companies is going to be dead money. You're not going to get a return on it. So I always tell people, look, if you know something about a startup private company, then go ahead. If not, I say stay clear of them get your money and go into the public market. Now, that's not a guarantee that if you buy a stock less than $5 on OTC markets or any exchange, then it's going to go up. That's the stock market. Now, whether it's manipulated or not, I don't know. If you talk to 5 people, you're going to get 5 different answers. Personally, I don't really go into the market and buy any stock. When I do consulting for companies and provide services, in addition to my cash retainer, I get equity as part of my compensation. And so I've always, for the last 25 years, have used the stock that I get for my portfolio rather than go in and buy the stock on the open market because of the fluctuations. In other words, I tell people at $3,000 a share for Amazon, how many shares are you going to be able to buy in your 401k that's really going to make a difference? 1 share? You could take that same $3,000 and go to 10 OTC companies that are under $5 a share and buy them, and maybe 2 or 3 or 4 of those will double in a short period of time. To me, that's a better investment than looking at some of these bigger blue chip type stocks. So again, whether the market is rigged, whether it's being manipulated, again, you can talk to people to get a different answer. I personally do not like private deals, whether it's on a crowdfunding platform or investing in a private placement. Now, Reg A, you mentioned Reg A. Yes, Regulation A is private, but it's also a tool to take companies public, and that's what we do at my firm. If a private company comes to us and says, we're looking to raise money, I say, look, we can help you, but only if we do a Reg A that we take you public, either on the OTC or if you qualify, we take you on NASDAQ. That's the only way we get involved with a company. Because, again, if it stays private under Reg A, it's still dead money. What are you going to do with your stock in a private company if there's no secondary market for it?
Right.
So, that's what I tell clients. Forget all this stuff about private companies. It's just dead money. And Mark Cuban said the same thing. He was quoted, and I'm not quoting him. I think he quoted me when he said private deals are dead money. I've been saying that for 25 years. So, that's my take on it.
Well, that's why I really like Regulation A a lot, because a lot of times with Regulation A, when it first came out years ago, it kind of took a little dip in terms of popularity. But now that it's coming back strong, I think that's exactly why people are looking into this, to use it as a vehicle to go public. And that's the end game for a lot of these companies. And then it makes sense, like you said. I agree with everything that you said there. It's a really, really good point. For everyone
and that's a good point that you make, Ron. That's a good point that you make, and I want to emphasize that. Years ago, Reg A really wasn't a tool to go public. Reg A was just a way of doing a private placement, but offering free trading shares under Reg A, so that if private investors came in and the company never, did anything else, at least the shares that an investor bought out of a Reg A, they could sell to somebody else, not on an exchange or anything, but maybe their Uncle Louie, they could sell. But under the new Reg A, since crowdfunding came out, the new Reg A was a tool. It's a tool now that you can use to go public. You can go through the process, do the legal work, the accounting work, get your audits done, and then, file to go on OTC markets or a national exchange like NASDAQ and go public. That's the benefit of Reg A today.
Yeah, good point. Really, really good point. So, one more thing before we close this out. We talk about these investors on Reddit, a very small group of people there, I guess. When they talk about those group of people making investments, we're not talking about $200 of these people, right? I mean, they were still in the thousands and the tens of thousands. That's how they were able to do this, right?
Yeah, and some of them bought call options, which again, it's a $5 contract. You have to buy 100 contracts. That's $500, and then those contracts tied up so many shares of stock. Other ones went in the open market and just bought stock when it was really low priced. But I think it was just a few $1,000s with a lot of people having about $1,000, $2,000. Eventually, it went. That $1,000 or $2,000 investment went to $20,000 as a return. And some of them did sell a little bit. Most of them just held on, and I think they lost all their money because they just. I always my position with stock is, look, if you double your money, sell half right now, take a profit, and then keep half of it in your portfolio. If it goes up, sell half again. If it goes down, then buy another block of stock. But these guys, from what I understand, listen to the chat, seeing the chat rooms and listening to the news, a lot of them were, the attitude, let's stick it to the man. The hell with money, let's stick it to the man, to the hedge funds, and they didn't sell. They didn't take a profit. So, some of them were small, some of them were, medium, a couple of $1,000. I don't think anybody threw big dollars at it except for the hedge funds shorting. Again, that's my opinion.
Yeah, no, I agree with that as well. I think that a lot of companies out there who are looking to raise money and want to go public, which, again, I think that really is the way to go. And, we talked about legal before. I just got to tell everyone out there that no one on this podcast and talking is a broker-dealer, and this is just all informational stuff for you guys.
Yeah.
You have to, so as long as people understand that. But I'll tell you, Mike, I think that really is the way to go. I think a lot of the companies should be looking at Reg A to take the company public in the long run. I think that is the best return for the investors. And I don't think that investors really need to be too concerned over what happened with the market manipulation over at the GameStop fiasco, I guess you can call it. But if a company does want to go public, then you're the guy to talk to. So how do they get a hold of you to do this?
Yeah, thanks. They can call me at 951-236-8473. They can go to my LinkedIn profile that's got all my information on it, or they can send me an email, MikeBrette@gmail.com. Be happy to talk to them.
Yeah, that's great. And Vicki, do you think that we've given a good overview of this whole GameStop thing for people who are listening to this, both issuers and investors as well?
Yeah, a little bit more simplistic way of explaining it, because it's a complicated situation and a lot of people don't really understand it or will ever be players in the whole game of it. But let me ask you one last question, Mike. Regardless of whether there was manipulation or the little guy versus the big guy or whatever, if you just let capitalism and the market do what it does, won't it resolve itself when issues like this come up? Won't it get back to a relatively normal position again? Even little fiascos like this come up? Just let it be?
Eventually things just work themselves out. But the problems that you have is you have certain people in the media that like to jump on something like this.
Exactly.
And, and cry wolf. And then you have politicians that want to jump on it to get some press. They all want to talk about, the wealth gap. The rich people get something, the little guy gets screwed. All want to talk about that kind of. That's just life. That's business in general. Maybe it shouldn't be, but it is. The rich get richer, and the poor stay where they are at, and the middle class, just struggle. But that's just the way it is. You're not going to change it through regulation by taking from one group and giving it to another. Eventually you're going to run out of people to take stuff from. So eventually you just got to let this stuff run its course. And like the Robinhood thing, they put the restrictions in place because the rules, the SEC rules and regulations for all brokers said you have to stop this trading if your capital requirement drops. Then you got to stop it. And that's all Robinhood did. It would have happened to any other broker-dealer that lost their capital requirement like they did. It would have so it would have worked itself out. But again, you have all these people that want to jump on something to get some free press, to do whatever. And I just think it's just a shame that we all get sucked up in it. We all turn the news on every morning, at 5 o'clock to find out the latest scandal that's going on and, shake our heads. But it's never going to change. It's going to be like that forever.
Ron, this is why we have Mike on as our guest, why we like having him on. Because, it's like right there down to the bottom line.
Yeah, and just think,
Don't be
Vicki,
influenced by the scandals.
yeah, and a couple of years, this will all be on the blockchain, right?
There you go. Yeah.
And it won't matter.
Yep.
And if we can do something with the Federal Reserve, maybe that's where we should look.
Oh
Yeah.
boy, there we go.
Yeah, that's going to be there.
Next
You can't do
podcast.
anything about that. Can't do anything about that.
All right, sounds good. Well, Mike, again, thanks for being a guest on the show. We really appreciate it as always. Always a good interview with you. Vicki, thanks again for co-hosting. This is a great, informative podcast. I think a lot of people out there really need to hear this. I said at the top of the show, this might be one of the most informative things that people, investors, really need to listen to this podcast over and over and over again. So, anyway, you're listening to the Mappable USA podcast at mappableusa.com. If you go to that website, scroll down the homepage, you'll see all our syndication sources. Pick the one you like best, subscribe, and you'll never miss another one of our episodes. If you want to be a guest on the show, like Mike was today, again, fill out that form, and we'll see what we can do about getting you on the show. And if you like what you heard today, send an email to info@mappableusa.com or just leave a comment on whatever page you're listening to this on. So thanks again, everyone. Thanks for your support. Thanks for listening, and we'll be back with you next week with another Mappable USA podcast. Have a great week, everyone.